Hello, I'm Pat O'Hare, Chief Market Analyst for Briefing.com. Today is Wednesday, July 9th. The stock market was clearly in a June swoon, but what about consumers? The consumer confidence reports certainly suggested they were, yet those can be discounted to a large extent given the weak correlation between surveys on confidence and consumers' actual behavior. At the same time, the popular press continues to drive home the notion that consumers have been left for dead after being rolled over by rising food and energy costs and falling home values. Regular readers know that we haven't been nearly as pessimistic, and for good reason. There has been hard data, as opposed to relatively meaningless surveys, that have refuted the sense of foreboding regarding the consumer. We're talking about items like the retail sales, same-store sales, and personal spending reports. We're not denying that consumers are feeling the pinch from the aforementioned forces and that they have curtailed their discretionary spending. They are. The hard data exposes this fact. Still, the overriding message in the hard data is that the U.S. consumer continues to spend in a way that will drive real GDP growth. In the next 24 hours, we expect to be reminded of this important point when a battery of retailers reports their same-store sales results for June. Established sources have indicated that same-store sales for June, in aggregate, are likely to be up in the range of 2% to 2.5%. Growth of 3% is typically equated with a healthy consumer, so the June forecast reflects the macro pressures that have certainly diminished the vitality of the U.S. consumer. Again, though, those pressures have not killed the consumer. As has been the case in recent months, the discount or wholesale retailers should fare best in the June reporting process as they continue to benefit from consumers' propensity to get as much bang for their buck as possible. Companies like Walmart, Costco, BJ's Wholesale, and Ross Stores are names to watch in this respect. Still, other retailers outside that niche could fare reasonably well given the fiscal stimulus that was plain to see in the May Personal Income and Spending Report. The impact of the stimulus checks, coupled with several other factors, such as better weather, promotional activity, and holiday-related spending, is expected to be the driving force behind the positive same-store sales results. Per usual, there will be pockets of weakness, and most sources seem to think the department store and women's apparel sectors will be the weakest areas. There is no reason to argue with those assumptions, since that has been the trend of late. I'm Pat O'Hare for Briefing.com. Thanks for listening.